part of what's going on is tax loss selling. That's just a technical factor. Beyond that, I think that the fear of inflation and interest rates rising, especially after Chairman Powell declared that perhaps inflation is not transitory here, has scared the financial markets.
Cathie Wood's 2021 have gone from bad to worse in December, with her ARK Invest exchange-traded funds tumbling in highly volatile trading as investors ditch unprofitable tech stocks. CPI-based inflation hit 6.8% year-over-year change in November, making it the biggest price increase since the rampant inflation of the 1980s. This might be a higher CPI read, but inflation has been going on for a while. If inflation remains high, ARK Innovation ETF may continue to fall. ARK did extremely well up until 2021 when it began to dramatically underperform the market. ARK Invest's flagship innovation ETF has dropped more than 10% in December, and is now down a whopping 23.7% for the year, putting it in bear market territory. 6 out of 8 of Wood's main ETF are now in the red in 2021. ARK Genomic Revolution has crashed more than 30%, and ARK Fintech Innovation is down around 15%. But despite investors dumping ARK funds, Wood has remained upbeat. She told CNBC last week that it's the traditional S&P 500 stalwarts that are in a bubble because they have a less bright future. We are not in a bubble. Our strategies would be flying if we were. I think we have not begun rewarding innovation for what's about to happen, and so that's where our conviction comes from, she said. Welcome back to Savvy Finance. A big thanks to all our viewers. We appreciate you a lot and never take it for granted. Wood, the founder and CEO of ARK Invest, shot to investing stardom last year. ARK's selection of ETF placed big bets on the technologies of the future, from fintechs to 3D printing, and make huge returns. Investors were flush with cash from government and central bank stimulus programs, and they piled into flashy tech names. ARK's innovation ETF returned around 150% in 2020. Yet many of those tech bets have begun to flop in recent months as global central banks have started gearing up to turn off the stimulus taps in response to soaring inflation. Concerns about the Omicron variant are also affecting investors. ARK Invest chief Cathie Wood reiterated her views on Tuesday that deflation rather than inflation is the biggest market threat, and that innovation companies like EV and fintech firms represent the best deflation hedge. In ARK view, inflation fears have been overblown and are likely to give way to the risks of deflation. Listen to Cathie Wood as she defends her strategies.
This really started in mid-February, this correction. So this is a very long correction for us. We actually think the bigger risk is deflation by far. I disagree with Barry completely on this, and I look at these rent increases as major tax increases effectively on the lower income earners, and the same thing with gasoline prices. The University of Michigan Consumer Sentiment Index is lower now than it was at the depths of the coronavirus. Why? Because purchasing power is diminishing here so much. I also think that businesses that have spent the last year and a half scrambling to catch up with consumption, they were way behind, are now overdoing it. And we are in the middle of a major inventory build that is going to unwind next year. So that will be a cyclical deflation. And then innovation itself is inherently deflationary. We're seeing, just to give one example, artificial intelligence training costs dropping 60% per year, right? And AI is going to permeate every sector, every industry, every company. It's going to become, very competitive. So we think, and that's just symptomatic. There are so many other deflationary forces out there associated with DNA sequencing, robotics, energy storage, blockchain technology. So, and what we're also seeing is the convergence between and among these various innovation platforms, so that one S-curve is going to feed another and another. And so people are saying, well, then why are these stocks going down? The question we used to get is, we're in a bubble, aren't we? I said, we're not in a bubble. And now that our stocks are down, but the averages are up, many people are thinking we're in a bubble still. And we are, and it's called the benchmark stocks, which are going to be disrupted as the traditional world order is disintermediated and in often cases is going to be destroyed by this new world. So you can say I'm talking my book, but those are two massive secular deflationary forces. One is extremely positive. Deflation, learning curves, cost declines, price declines in innovation means we'll get a boom in innovation. The other side of that is there are many companies who, especially since the tech and telecom bust, and then again 08, 09, they've catered to short-term oriented shareholders who are scared. They've been scared ever since 08, 09, and they want their profits now, they want their dividends now. So these companies leveraged up, buy back shares, manufacture earnings, and didn't invest enough in innovation. They're going to face a lot of problems, and they will face the bad kind of deflation.
Many tech companies, especially the ones Wood specializes in, are not expected to become properly profitable for many years. With central banks set to raise interest rates in the next year, the far-off returns these companies offer have started to look a lot less attractive compared to other parts of the market. Going into 2022, investors will be faced with less fiscal and monetary stimulus supporting the economy and markets, with the Fed removing liquidity by tapering bond purchases, Steen Jacobsen, chief investment officer at Saxo Bank, told Insider. And that means that high-growth stocks, which is built entirely on low rates and high top-line growth, of course, is getting impacted massively, he said. Big ARK holdings such as Teladoc, Square, and Coinbase have tumbled. Many of Wood's funds would be doing even worse were it not for her big bets on Tesla, which has jumped more than 40% this year. A sort of inverse ARK Innovation ETF that's betting against Wood's stock picks ticker SARK has soared more than 20% since launching last month as many investors have spotted an opportunity. Wood has floated the idea of an ARK on steroids fund that would also bet against stocks. And this week, ARK is launching its Transparency ETF designed to track an index of transparent companies. ARK Invest did not respond to insiders' request for comment. Looked at from a broader angle, things don't look so bad. The average annualized total return for ARK funds is still around 30% over the last 5 years. Saxo's Jacobsen said he thinks ARK's funds have a bright future, and that investors need to remember their premise. The premise of the ARK funds is not to give you an S&P or a NASDAQ performance. It is to buy into the concept that the future has technology embedded into it, and to be part of the future, you need to buy a big number of lottery tickets. Do you think Cathie Wood can reverse her negative holding? Let us know what you think in the comments. Thanks for watching.